Welcome back to this fourth and final video on wedge breakouts. And this is really the exciting part, because this is where we get to identify our take profit areas. And the easiest way to do this when it comes to wedge patterns is what I like to do. I like to always use the low of the market here. So if this pattern had broken, let's say, to the upside, what I would want to do is use this high up here. All right, so these range highs and lows should always be your first place to look. Okay, so let me go ahead and draw those levels onto the market. Okay, so there's our range low, because again, this pattern broke out to the downside. And so this would be take profit number 1. And again, on these wedge patterns, you're always going to have a level like this where you're going to have a range low, or again, in the case that this broke out to the upside, you would have this range high up here for an area to look for your take profit number 1. Now, let's go ahead and zoom out here and see if we can find something else on the daily chart that may give us a heads up of where this market was headed. Now remember, this area right here, you would not have known about because this would not have formed yet. So we can see this now, but as this pattern broke up here, we wouldn't have been able to see any of this yet. All right, so keep that in mind. So as we look at the daily chart, what I typically like to do is, if I just draw a trend line here off of these lows and come back over and move back down to the 4-hour. Okay, so this area, now you'll notice that we did have an extremely large gap actually that occurred here. Now in this case, you can also see that once this market gapped, it actually did respect that trend line that I just drew. But again, we wouldn't know that until the market completed this area right here. All right, so, but you know, this area would be a great area to look for take profit number 2. So if we had take profit number 1, so TP number 1, and then we had this trend line down here as TP2, okay, this would have actually given us, if we just look at this from the entry, this would have given us about 180 pips here and an additional 80 pips here. Okay, so essentially we're looking at 260 pips total. And just for example purposes, I'm just going to use the 180. So we're just going to assume that we took out our entire position here at TP number 1. All right, so we have 180 pips for take profit number 1. Our entry was here. Remember that our stop loss was up here above this high. Now the distance from here to here was about 70 pips. Okay, so you're looking at 180 take profit, 180 pip take profit, and about a 70 pip stop loss. Now, if you remember from the risk to reward ratio lesson, we know that our reward has to be at least twice our risk. All right, so does 70 go into 180 twice? And yes, it does. And actually, this gives you about a 2.5 R. Okay, so what that means is that if we had risked 2% on this trade, we would have actually come out with a 5% profit. Okay, not bad, not bad at all, because again, we're only risking 2% on this trade. So our stop loss up here, we risked 2%. This take profit down here would have given us a 5% profit. And again, this is just assuming that you took out your entire position at take profit number 1. There's a really good chance that with this trend line in focus that we could have actually taken out the rest of our position down here and made an extra 80 pips here.